Hey, Bulls and Bears. Today's report is especially for my gold and silver stackers. Now, there's been a lot of reporting, a lot of news lately around the financial news world that there's going to be some volatility in the markets coming up because the money printers may be pulling back some of their support, and actually a lot of their support is what they're telling us. So people are asking the question and preparing for more market volatility, not just volatility, but people are preparing for a possible correction in the markets. And a lot of people are looking for safe havens. I know a lot of people here on this channel are precious metals stackers, gold and silver stackers, etc. So today we're going to talk about how gold and silver and precious metals may react to a market decline or correction. Let's go ahead and take a look at some historic information and try to connect some dots onto where that may be leading us into the future here and how we might be able to prepare and actually even make money from this possibly. Now, with the Fed talking about raising interest rates, they're going to taper. Let's take a look and see what happened the last time the Fed raised rates and tapered. And not just taper, they actually reduced their balance sheet. Let's go back to 2018 and see what happened. Right, we're looking at the Fed balance sheet. We see that the balance sheet held pretty steady from about 2014 to about 2018, and the Fed started shedding assets from their balance sheet. Of course, that quickly reversed, headed into the health crisis there in early 2020. But we do see the balance sheet started declining in 2018, all the way up until about October 2019. So almost 2 years of gradual balance sheet reduction. Combine that with the increase of the federal funds rate. We look at this chart here starting in late 2015 all the way into 2019. The Fed funds rate was increased. Of course, they started dropping it several months before the health crisis in early 2020 because they saw how the markets were reacting and they were afraid. So they came back in and cut the funds rate to rock bottom once again. Now, how did precious metals react? Well, let's take a look at a chart. We saw that we're looking at a gold chart here. It took a big drop. Now, gold did run up big, peaked out in about 2011, started coming down, but it's interesting, starting around the time when the Fed was changing course, shedding assets from the balance sheet, and raising the Fed funds rate, gold started going up. So just the opposite of what a lot of people would have thought. Typically, gold, silver, precious metals have been viewed as an inflation hedge, but prices seem to rise even when the Fed is effectively trying to fight inflation. And in this case, they were raising the rates, but we saw gold not just hold up well, but actually rise during those times. And of course, it went on to rise even more since then. Now, we've got to remember, there's a lot of things going on behind the scenes with the price of gold, silver, and precious metals in general. The prices can be adjusted by paper contracts. For example, you have things like naked shorting going on, and banks have actually been fined, trading houses and banks have been fined for their manipulation of precious metals via the paper contracts and the paper markets. But even with all that, we can still see that gold, silver, precious metal was pretty resilient during a time of rising interest rates and the Fed pulling back some of their support for the markets. Now, it doesn't mean it's going to play out exactly like that. History doesn't always necessarily forecast what's going to happen in the future, but it can give us a pretty good idea of what we might expect and how we can prepare. I think the big money is going to be made for gold and silver investors after the complete collapse of the current currency. We know that most fiat currencies have a shelf life of about 40 to 50 years. We're already past that for the US dollar. And I'm not saying the dollar is going to disappear because the dollar is strong right now, especially compared to other fiat currencies around the world. But fiat currencies in general as a whole, we see that the purchasing power is fading as prices continue to rise and the purchasing power continues to decline. Now, will that change with the upcoming actions here out of the money printers? We'll have to see. Either way, I hope you're prepared. Hope you like this report. We're going to make it a quick one today. Make sure that you are subscribed if you're not already subscribed. We have a ton of important economic news that's going to be coming up here in the next few months, especially. It's going to be interesting times, to say the least. So hope to see you back here very soon. Bye for now, everybody.